correction, but how will all of these overnight cues impact our own Indian market? We now have a research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, let me first start off with how the trade setup looks. Well, the market started off the week on a very weak note. The Nifty slipped around 68 points and extended its losing streak for the fourth consecutive session. However, it did manage to defend that crucial 25,000 mark. Keep in mind that this was largely driven by renewed global trade tensions, which drove the benchmark indices lower. But on the other hand, the mid-cap as well as the small-cap end of the market, that continued to be vibrant. The mid-cap index, small-cap index saw a good uptick in yesterday's trading session despite the fall that we saw on benchmark indices. Most sectoral indices were in the green. The gains were led by Nifty Realty as well as Nifty Media. Pharma, PSU banks also continued to do well. But what did not do well is IT, because it was the top sectoral drag driven by Tech Mahindra as well as Wipro. Now, as far as today's session is concerned, we'll be keeping an eye out on any sort of updates that come from the Indian delegation that is in the US. An announcement is not expected before Thursday, but still, we'll be watching out for that. That's a very important factor that will drive the markets. As far as economic cues are concerned, India's trade balance data and US CPI data will be out today. Lots of earnings lined up, and most of them are from financials, HDFC Life, ICICI Lombard, ICICI Prudential, HDB Financial Services, as well as Bank of Maharashtra and GIC. Auto stocks will also be on our radar today. The first Tesla showroom in India is expected to open doors today, so we'll be watching out for that as well. Let's take a look at Gift Nifty. It was indicating a flat start to the Indian markets. It continues to remain the same. But let's look at what the F&O setup is now indicating for us. We now have Mangalam joining in. Mangalam?
Well, for the last couple of days, there has been a grind lower for the frontline index. Earlier, we were consolidating at the upper end of the range, and now we're consolidating in the lower end of the range, with the range moving lower. But the good part yesterday was the broader markets did well, telling you that we're closer to the end of this decline that we're seeing than we are to the top or anything of that sort. The advanced decline ratio, that comes up for you. Towards the last hour of trade, we did see some perk up coming by in the Nifty Bank, and the advanced decline as well was absolutely split right down the middle, telling you that the bulls have shown in some fight, even as the bears are trying to take the market lower. There was not incremental selling coming in from the FIs in the cash market. The previous trading session was 5,000 crores. Now it's close to around 1,600 crores. But what's happening is that they are selling lock, stock and barrel in index futures. For the fifth straight trading session, they've sold more in index futures. Yesterday, they unwound about 241 long contracts, but added 17,000 short contracts on a net sell of 3,300 crore rupees. What it means is that over the last 5 trading sessions, the FII longs have fallen from 29% to 18%. Conversely, the shorts have increased from 71% all the way up to 82%. And the net contracts, which crossed the 1 lakh mark yesterday, has now gone to 1,20,000. And not only are they selling in index futures, they've sold more calls over the last 2 trading sessions than they've sold puts. Yesterday as well, close to 10,000 crore worth selling in index options, 52,000 short contracts added on the call side and 20,000 on the put side, telling you that on the way up, there could be some resistance. But I'm believing that maybe on the way up, if the market does not, face much resistance, then there could be case for short covering. Why do I say that? Because one, India VIX, which was closer to complacency levels, is now spiking up for the last 2 trading sessions. The put-call ratio on the Nifty is moving towards the lower end of the range. 0.65 to 0.7 is where we see a bit of a bounce from. And thirdly, we have the Sensex weekly options expiry today. The last hour of trade on the last Tuesday as well saw a lot of volatility. Does that continue today or not is something we'll be watching out for. On the way up, 25,100 call and the 25,200 calls have been extremely active. The way down, 25,050 put and the 25,000 put equally active as well, telling you that the option writers believe that there is support between 24,950 to 25,000 and congestion between 25,220 to 25,270. For the market to sustain an up move, we have to cross and close above the 20-day moving average. A lot of short covering seen on capital market plays like BSC and MCX yesterday, and a lot of long positions added on Paytm.
Thanks for that, Mangalam. The bulls may be hoping that after 4 consecutive days of a fall, we expect to see some green. Let's see whether